Okay, since we already have here is a summarize of all of the transaction of the company for the we have discussed in the previous video. So we have seven the event. So you see that the last event about the appraisal value of the land increase is not the transaction. So here we can see that the first we call is a basic accounting equation, asset equal liability plus the stockholders equity. And in the second line, you can see that the expanded accounting equation, we have the plus cash account plus the land account equal the liability account not payable. For the stockholder equity, we have a common stock return earning, and for return earning, we can develop more three accounts. The first one is the revenue, the second expense, and the last one is the dividend. So by end of the period, you can see that the company have a total cash amount of the sum of all of the transaction here. It 51,000 and the land value is 500,000. The company still owes the creditor 400,000. The common stock value unchanged 120,000. However, the company done a good job. They own the 85,000 and they pay the 50,000 for own expense and they pay the dividend. So now the return earning is 31,000. If you make the sum, so the total assets now is 551,000 and the total liability and total stockholder equity is the same 551,000. So now let's prepare the financial statement for the company by using the data so that we have presented about right. So we will the first one will prepare the income statement. So what does it mean, the income statement? The income statement measures the financial performance for a span of time called accounting period. So here, if you look at the first line of the financial statement, is the name of the company. And the second line here, you can see the second title is the name of the financial statement is the income statement. Because for income statement, it means that the revenue and the expense of the company for period of time. So we have to mention here for the year ended December 31st, 2013. It means that from the beginning to the end. We follow the matching concept. We measure revenue with the expenses incurred to generate rent. So for the rustic cases, we have the rental revenue of the 85,000. It means that increase the assets. We have the operating expenses, assets decreases of 50,000. So the net income should be the difference between the 85,000 minus 50,000 equal 35,000, right? Since the revenue was greater than the expense, since the company has a net income of 35,000. If the expenses had been greater, it would be a net loss. This net income figure is crucial and is a flow directly into our next income statement. So now we can look at the statement of changes in stockholder equity. Right? So you can see that for the companies, we see the second financial statement here. We have a statement of changes in stockholders' equity, and also for the period from like 1 year. So for the first slide, we look at the beginning common stock. The company on the first day says 0, and after that we have plus the common stock issue is 120,000. So now we have an ending common stock of 120,000. because we mentioned that the statement of changes in stockholder equity was composed by two components. The first one is common stock, the second is the return earnings. So we have to look at what is the changing in the return earning of the company. So we have a beginnings, the retained earning is 0. We have the less plus the net income, so we calculate from the about here is 35,000. We move here, and the company pays the dividend of 4,000. So now we have ending returns earnings should be equal 120,000 minus the 31,000. Plus the 31,000 because positive. So we have a total stockholders equity is 151,000. Next, we will prepare the company's balance sheet. This statement shows the company's financial position at a specific point in time. Right? So we can say that it is a snapshot of the accounting equation of the company's finance. So we hear that the name of company, the name of financial statement is a balance sheet, and we have as of December 31st, 2013 years. Right. So the balance sheet, what does it mean? The balance sheet is the social company assets and the claim on those assets. It means that's the liability and owner's equity. Right. So the accounting equation must be balanced. It means that the total assets should be the total liability and plus the stockholder equity. And if you look at the balance sheet in this way, we call this a horizontal assets, right? A vertical asset. So for the vertical asset, we can see that the company have a two kind of assets. The first one is the cash and the second is the land. We will present the asset in order of liquidity. What does it mean, the liquidity? Liquidity, it means that's all of the assets that can transfer to cash easily. So we put cash first and land. So we have a total asset is 551 like our previous slide in the learning objective number 4 and 3 and 4. Now we look at the other part of the asset is liability. The company have issues a note payable, so they have a borrow 400,000. For the stockholders equity account, we know that there's a two component of the stockholders equity. The first one is common stock as when the company issues stock. And the second is the return earning of 31,000 that we move from our statement of changes in stockholder equity. So here we have the stockholder equity is 151,000. We have a total liability and stockholder equity equal 551,000. So this is the liability plus the stockholder equity. So now we can see that the total assets equal the total liability and stockholder equity. Okay. So I hope that it's clear for you. And now we look at the company's financial the statement. We call this the statement of cash flows. This statement will explain how the cash balance change from the beginning to the end of the accounting period, right? So now if you look at this slide, you can see that the company's in general, the cash flow statement divided by three categories. The first one, operating activity. It means that they receive cash from revenue and paying expenses. The second, cash flow from investing activity. They paying or receiving cash related to productive assets, to the assets that to help the company to generate the revenues in the future. And the last one, we have a cash flow from financing activity. It means that the obtaining cash from or paying cash to the owners and creditor. Before moving on, it's important to understand the closing process at the end of an accounting period. We close all of the temporary account, that's the revenue and expenses and dividend to retain earnings. This reset them to zero for the next period. Permanent account like assets, liability, and equity are not closed and their balance carry over from year to year. Right? So we transfer all net income and dividend to return earning and we get this zero, right? So here we will look more at the next slide, but I just want to know to share with you that in accounting we have two kinds of accounts. The first one, temporary account, we call it expenses, revenues, and dividend. And another is the own kind of liability, assets, and equity account, we call it permanent accounts, right? So the temporary account will help you to check all of the financial results for limited period of time, like 1 month, 1 year, etc. But the permanent account will check financial results from year to year. So now we look at the learning. The last part is horizontal financial statement model. We use it to record business event, right? So here is the horizontal financial statement model. If you look at the all of our transaction here for the first part, and the second part is the balance sheet, and the third part income statement, and the final part is the statement of cash flow. This is a tool to visualize how business events affect the financial statement. This shows the transaction across the balance sheet, income statement, and the statement of cash flow simultaneously, instead of just showing the impact on the accounting equation. This model would have a column for cash, land, note payable, common stock, and retained earnings. But it would also have a column of revenues, expenses, and the three categories of cash flow. For each transaction, we would see not only from the balance sheet stay in balance, but also to see in the income statement of cash flow are affected. It is a powerful tool for understanding the interconnectedness of four financial statements. We won't go through a full example today, but it's an important concept to be aware as you continue your study. Finally, let's quick recap what we covered today, right? So we started with building the block of how to say block of the accounting, the element of and we construct the fundamental of accounting equation, right? Asset equal liability plus the owner equity. We then walk through the three series of transactions for new business, recording each one and classifying it as an asset source, use or exchange. We learn key concepts like double entry bookkeeping and the historical cost principle. Finally, we use the data from those transactions to prepare the four key financial statements, the income statement, the change in stockholders' equity, the balance sheet, and the statement of cash flows. This report tells the economic story of a business. The best way to learn accounting is to use this. I encourage you to look at the annual report of some real company like Apple, Amazon to see if you can identify the concept we discussed today, right? So you get a financial statement, the note, audit report, etc. And we can see that the company will distribute expensive annual report with many color photography, and you can find on Yahoo Finance. And uh, but before to read on this way, the financial statement of real world companies includes the numerous items related to advanced topics that are not covered in introductory accounting textbook. However, we encourage you to look for annual report in the library from your employee or from the internet, right? So thank you. If you have any question, please feel free to ask me, and see you in